Hi, welcome to this video today, which is on the 24th of December. It's Monday, and just going to look at a couple of Forex pairs today. Both include the New Zealand dollar. They're going to be NZD USD and NZD CAD. Now, I've looked at the NZD against some other currencies over the last few weeks. NZD CHF, that's moved quite nicely to the downside. NZD JPY, really nice move to the downside, well over 300 pips and more to come. In my view, the Kiwi is just the most overbought major currency of all in our view. Now, NZD CAD, we featured in a previous video, hasn't really moved much since I did that video, but I think it's getting ready for a big break to the downside. And NZD USD, a few people have asked me to take a look at it, and I think it looks really bearish as well. Kiwi just going a long way to the downside. Now, in terms of the NZD, what I like about it is that it's just moved way too far away from its long-term fundamentals. Sentiment to it is way too bullish, and I just think it'll snap back, okay? And we'll have a really big trend down in the Kiwi. Yeah, so far in the yen, really great profits, 300 pips plus. I think the two we're looking at today can easily do 300 or 500 pips in profit potential, obviously, if our view is right. Now, what we will do is we will go to the charts in a moment, but just for new viewers to our videos, when we are doing our analysis, we will keep the technicals very simple. We are only going to focus on big levels that matter to key institutions in the market, and to find those levels, we're going to use our favorite tool in Forex trading, the COT, the Commitment of Traders Report. If you do not know what it is, there's a link beneath this video where you can learn more about it. If you just want to watch the video through right now, just keep in mind what we want to do is always trade with smart money commercial hedgers when their positions diverge away from speculators. Also, when I'm doing my charts, please again keep in mind it's my view as of right now. It can change in line with the market conditions. If you want all our trading techniques and our daily technical analysis of 14 major Forex pairs, again, you can click on the link beneath this video and join our member centre, get live access for a limited period until the end of December. Right, let's go and look at the trade setups. We're going to start with NZD USD first and the COT net traders positions. All right, just on the COT net traders positions very quickly before we go and draw some levels of entry, stop and target. Now, in terms of for new viewers, commercials in red, the smart money hedgers and the large speculators are in green, okay? And we're just interested in how these groups are moving against each other. Now, we do look for divergence, and you can see it here, okay? Commercials build up a really big long position, biggest in a couple of years, against the specs going short. We find support, we push off in favour of the commercials. Now, the commercials, they're hedgers, they're naturally going to drop their hedges down, okay? Prices move down a bit, and look at the commercials, they completely drop out of their long position and go net short. Speculators do the exact opposite, they come out of all their shorts and go long. Now, while divergences, we're always looking for them, we do like crosses as well. Rapid change of movement when the groups go against each other. And I think the NZD obviously coming down a little bit. It's going to come down a lot more. The commercials, from my experience, the COT will keep selling. Specs will go against them, and that points to more downside. I think we could see significant downside in this pair. So let's just go to the chart and draw some levels of entry, stop and target. All right, on the day chart of NZD USD, just very quickly before I do my levels, let's just take a look at these 3 points over here. For me, the fundamentals are out and out bearish for the Kiwi. Now, in terms of what I want to do very quickly, is to explain why the commercials did what they did. Now, the rally from the lows I put is a short squeeze only. Now, if we go to the center of the chart here, it's where the commercials were really buying, specs really selling. The commercials, they're hedgers. They know it's oversold, okay? And then you get the rally up. Once oversold is corrected, they sell, okay? Now, what caused the short squeeze or the big number of speculators short to exit the markets? Well, the RBNZ said there would be no need for them to cut interest rates, which the market had been looking for. But they also said no rate rise is coming until 2020. But it was enough to rally the Kiwi that the RBN said there'd be no interest rate cuts coming. But this is still very bearish, okay? In terms of point number 3, these are all bearish for the Kiwi. China in deep trouble. That's going to weigh on New Zealand, because New Zealand, obviously a lot of trade with China. Commodity prices are going down. Kiwi a commodity currency, so that's going to hurt it. Risk off in the markets, that's just bearish to Kiwi. Kiwi is a risk proxy currency, dollar a bit of a safe haven. So in terms of the chart action, I'm just going to explain something for new viewers, because it's something we're always looking for. When you break up, okay, you get to this 20-day moving average. You see a battle to get through it. That is a reversal back beneath it. 3 candles sit on it, you push away. That turns the trend in favor of the bulls, okay? If you were bullish, you'd look for the 20-day to hold dips. So you get it right on that candle there, she pushes off. Now when she gets above 69, our belief is she's overbought. So we're just going to look for the 20-day moving average to snap, and that will then put, the odds in favor of the bears in our view. So always looking at that 20-day moving average in nice moving trends. So what happens is we exhaust on that candle, come down, we find support, then that one will go short. We finish above it, but not by much. We finish on it, poke through it briefly. It's not a brick wall, but it settles beneath it. Then a nice sell-off, a blue, and another red. So for us now, the 20-day has given way, and it should provide resistance to rallies in our view, okay? So from our perspective, I'll just draw that's trajectory. That crosses roughly with the 20. You've got 2 bodies there as well. Okay. So where would you sell her? If you're coming in fresh, if she rallies up above 68, I'll just sell back through the number, or if she just tops out around this level, or if she comes through the next round number at 67, you've got some support here. Okay. So on a rally or on a break, okay, stop well back from here, behind that tail really, and then just basically watch and see if she runs. Now with the COT behind you and just some simple fundamental analysis, from our perspective, the Kiwi big fundamentals are bearish. On the other side, the USD is a bit of a safe haven. And I know a lot of people have said, well, US rate hikes are not going to be as much as people thought a few months ago. That's all factored in now. Okay, so that's not going to hurt the USD. So break here where we're going down to here. So back to chart lows. If I can get my line straight. There we go. And then you can see it on the left. I put the weekly levels, 62.50. Then even as low as 50 if we get big risk off in the new year. So from our perspective, this move down just could be the start of what could be a major move. We've snapped the 20-day. If you're a long-term trader, I think this looks very attractive. Now, in terms of NZD CAD, which we're going to look at next, that hasn't yet confirmed a breakdown or decisive breakdown. I think it is about to this week. I think it looks a really attractive pair for long-term traders. So let's go and take a look at it. All right, on the chart of NZD CAD daily. Now, in terms of just the COT net traders positions, regular viewers will know there is no official data, but we make it for the crosses. You only get it for the majors. So to get the cross, what you do is work out what the groups have got in NZD USD, USD CAD, then you have the cross. We express it as a simple ratio. Commercials 2.8 to 1, shorts over longs, so bearish. Speculators 2.4 to 1, longs over shorts, so bullish. Divergence of 5.2, which is reasonable. and gives us a bearish bias. Now, just in terms of the fundamentals, before I go through the chart, bearish the Kiwi in our view. The interest rate outlook favours the CAD. I think the Bank of Canada could well raise rates next year. Not looking for any rate rises from New Zealand till 2020 if we take the view of the RBNZ. So that favours the CAD. Canada exposed to the US. The Kiwi is exposed to China. Now the US economy is in better shape than China. Okay, so that's bullish for the Canadian dollar. Risk off also favours the CAD over the NZD. It's the commodity currency that will hold up the best. Now, in terms of the chart action, what you have down here, a bit similar to NZD USD, of course. The commercials buy heavily, the specs sell. The COT divergence goes up to almost 10, which is really pointing to a reversal. We did actually trade this one long once we got above the 20-day moving average. Look at it, find support, off we go. And then we bailed out of our longs. Now, in terms of the commercials, they are basically warning that this is just a short covering rally, because they exit all their longs and go short, and speculators do the exact opposite. The speculators are being short here, now want to buy, commercials want to sell. So we're just looking for prices to top out and come down. Now over here you've got a poke. Sorry, if I can just get my mouse to work. You get a poke above 90, or poke towards 90 I should say, and we're looking for the level, you know, to hold or prices to top out into it. It gets above it, yeah, but keeps coming back. Okay, so you get these pokes, but they're unconvincing. We basically are already short with the stop behind 93. Okay, we're in early as per usual. Just come off this level, but yeah, to up our position and get confirmation, I would like to see these candles get taken out. We just briefly got through the round number, but not really away from what I would call round number turbulence, but I think we are going to get away from it. So I think, yeah, coming through that level, say 90, 70 is a good level to come through. Just draw a trajectory in as well. You can see we're struggling to get higher. So I think we could well fade into the diagonal trajectory, or if we get towards 92, we're just going to fail, in my view. So through this level, stop behind 93. Mine is at 93.30. Where could we go to? Well, I'm going all the way for chart lows. So I'll just make that line a bit longer. So down here, I think. So yeah, if you come in with a stop back behind 93 through here, you've got fantastic risk to reward in my view. If, of course, what I think comes to fruition. A lot of traders might see some support there. But for me, I just don't think that's going to hold all the way back chart lows for us. Of all the Kiwi setups that we've looked at over the last few weeks, this is the one that has not come to fruition yet and really confirmed a move to the downside. But I think coming week, keep your eye on it. I think, well, for me, it looks a good one. Obviously, you can decide what you think of it for yourselves. But Kiwi, for me, some reasonable success with shorting it so far. I think there's far lower prices to come. So we shall see. But that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.